Good evening and welcome to tonight's live webinar where we look at the ASX investment opportunities in review for 11th of May. Any individual reading or listening should discuss with their financial planner or advisor the merits of any recommendation or offer presented in this material for their own specific circumstances and realise that not all investments are appropriate for every individual. Investor Signals offers a broking account. Within that account, we have a couple of different services. We have model portfolios based on the ASX 20, 50 and 100. We also cover US stocks with a particular focus on the S&P 100. We operate ASX and US high conviction portfolios which pick up the ideas expressed on the daily blog. We have a global ETF iShares portfolio, and we have an independent portfolio where we can work in partnership with you to execute trade ideas that we jointly agree on. All within the same portfolio, we can utilize derivatives to enhance portfolio returns using covered calls, for example, or buying put options for protection. If you'd like to know more about the Investor Signals broking account, please contact 1300 614 002 or send me an email, leon@investorsignals.com. Visiting our website, if you haven't yet taken a free trial to our members area, you can do so by clicking on the free trial link at investorsignals.com. If you've already created a trial and maybe you just want to reactivate it to take another look, please drop me an email and we'll happily to reactivate that trial for you. If you're ready to open a broking account, click on the online broking account, and there's more information there where you can fill out the data collection form, and then I'll give you a call to discuss getting that broking account up and running for you. The technology that we use tonight is the Investor Signals members area. You can subscribe to it for $1,320 for 12 months. And again, if you'd like to do that, just give me a call in the office on 1300 614 002. Tonight what I want to do is start with just a couple of processes, and our blog that operates off our website at 11 a.m. in the morning, you'll get an email that comes through and there'll be a number of headings in there, and if there's something there that catches your attention, you're going to click on that heading, and if you have a membership with Investor Signals, it's going to take you through to the website, in particular through to the blog, and you can read specifically there about our view on Coles and a current price as to where we think support's going to develop. I often refer to sort of the algorithm signal, which is the green marker at the bottom of the screen there. I'll refer to short-term indicators, which is just our short-term momentum indicators, waiting for those to turn positive. So the consistency there in the trades that are described just helps to build up sort of an education process around both our short-term trading thinking, but also the long-term algorithm engine as well. So once you're in the blog, recent posts there, you can go through and have a look at other posts from prior days, or generally there's 2 or 3 posts in a day, or you can just click on home, and that'll take you to the home of the blog page, and you can just see all the posts, and then you can just scroll through them. I find that's the easiest way, rather than going back to the email and then coming back into the blog just to simply scroll through. These here are only available to our members, and at 3:30 in the afternoon our algorithm engine runs a scan, and you get an email like this one, and from this email, again, providing you have a membership, you're able to just click in and it takes you straight into the charts, and then from there you can toggle through those charts. And just as an exercise, we'll do this now. So from today's signals, what's being flagged is Domain Holdings is now under sell signals. I've put a resistance line in there. The secondary indicators also starting to point down. The momentum indicators haven't quite rolled over, but we're starting to look at resistance building there. So the Hack Beta shares, just flagging that that's had so it's gone from buy signals, which are these bottom markers, into sell signals up the top here, and we're seeing a number of these ETFs now under sell conditions. IFL or IOOF Holdings, financial services play, that's now switched to sell signals, and you've got the red arrow there as well. And I'll talk a bit more about sort of these. So this is what we refer to as a primary signal. The arrows are a secondary signal, and then the momentum indicators is a third sort of confirmation of a shorter term perspective. So you're able to toggle through those signals, and that runs at 3:30 each afternoon. The That's a bit of background there on the technology, and I'll talk more about that as we actually toggle through or talk live about today's top 100 companies. But again, if you want to get access to the technology, $1,320 for the year. From a market standpoint, I think this is the important picture for us to have a think about. This is the Nasdaq. We've been watching this. Going back a week ago, we had a consolidation just above the short-term moving average. It closed back above it and it's continued to rally. There's a price gap in the index up at about 9,500. It would seem unlikely that we get up to that level. I've highlighted where the resistance range is, but what we're looking for is this price as a first trigger to start to roll over and come back down through that average, or you'd see it reflected in these shorter term momentum indicators actually starting to roll over. I have spent a fair bit of time in the prior weeks looking at the fundamental valuations of the market, the potential sort of recession durations and percentage. So I'm not going to revisit all that tonight. Our focus here is identifying opportunities in the market within the top 100 and just being mindful that this Nasdaq's starting to get into stretch territory at the moment. On that note, let's go into the graphs and we'll start with the XJO, and then I'll roll through the ASX top 100. So our market at the moment really tied into that performance of the Nasdaq index. So I've just flagged resistance there at around 5,500 points, but at the moment it's still closing above the average, and it's really being driven by that sentiment coming out of the US and a willingness to sort of look past the hit to earnings that are obviously going to be coming through in this June period. We have some doubt as to whether that is the right approach and remain sort of quite cautious as the impact that earnings downgrades in the June quarter results will have on markets once reality sort of starts to play through. So from the XJO, let's go into the top 100 and we'll roll through these. So we go into the watch list, select ASX 100, hit percentage gains to the top for today, organize it in buy signals there. So we're going to go through them by best percentage performer under buy conditions, and then we'll get a certain way through the list and you'll see it switch from stocks that are under buy conditions into stocks under sell. And given the concern that the Nasdaq's bumping up against resistance, it's worth just pausing and having a look at these stocks that are under sell conditions. But we'll start here. So Macquarie, I'd highlighted in last week's recording that there was support there at Macquarie at around $93. The stock's pushed higher. It is under algorithm buy conditions. The concern with Macquarie, I thought, was the latest earnings results show that the last 6 months' earnings were down 24% on the same time last year. So it was a bit of a concerning trend coming into this period, and obviously nearly all companies have removed forward earnings guidance, so we don't have much visibility as to what the next 3 or 6 months of earnings are going to look like for companies. But it seemed a bit concerning that the last 6 months there was that deterioration in earnings there. But so Macquarie may be in a strong market. We see it back up at 120 before it starts to run into resistance there. Afterpay, so it's under buy signals, crossed above the moving average and it's continuing to move higher. Cochlear, so this is one that I flagged on the blog today and have been recently commenting on it. It's a beneficiary of restrictions being eased, elective surgery beginning to take place again globally. Their commentary out of China suggests that they're seeing strength in and a return to normal trading conditions. I think that was sort of partly responsible for the sort of optimism and the strong share price performance there today. But the pattern there to look at is it's a higher low formation, support there at around 175, short-term indicators moving higher. As long as it stays above that 175, you can stay on the long side of Cochlear. Not doing there with Atlas at the moment, or in Dexus, Flight Centre, a couple of GPT. These whole, whether it retail property trusts or office trusts, again, hard to get visibility on what the earnings impact's like. The market's treating these positively as the economy reopens, and it may be that there's a little further upside in some of these names. You just need to be a bit cautious of that broader index backdrop. But if you were looking for a quality office trust, GPT certainly sits at the top of that list. I think within the REIT sector, we've been leaning towards Goodman Group as our preferred REIT. But if you're coming back now and starting to say, Goodman Group's actually just had a sell signal today or on Friday. But if we're looking for something, we know that GPT is one of the best of breeds within the property trust space. But I'd certainly recommend looking at running a stop loss if it reversed back down through that moving average at the moment, again, given that sort of backdrop in the US equities. Downer EDI, we've been tracking this with a view simply as long as it holds above that uptrending support line, you can continue to participate in that uptrend. Qantas, we're avoiding that. Sydney Airport, so support there at around 540, a break below that you'd want to be cautious. BlueScope Steel, so support there at around $9 under a higher low formation, but not a stock we're too active in, but it is in the algorithm model portfolio at the moment. Computershare, this seems to be a reasonable risk reward trade where you can buy this, sell covered calls. We think this bumps along sideways. It's got a bit of valuation support where it is there at the moment. Insurance Australia Group's dipped from 650 down to 550. All the global insurance companies just seem like a bit of a tall ask at the moment. They've got various issues, but say QBE is the one that we're probably most cautious on. Insurance Australia at around 550, maybe there's an opportunity there. I've just put a support level there at 520, but again, a reverse back through that, you just want to be a bit cautious. APA back up against resistance. We don't see this sort of doing too much more than where it's trading at the moment. It is a stock that we've liked in the past. It's under buy conditions, but back up near resistance at the moment. AZJ trading sideways, so again, revisiting the issue here as they pay out 100% of their earnings in dividends. We don't really see room for a lot of earnings growth in this environment. It is attractive because it has a defensive characteristic to the income stream of the business, but at around this 450 should be full value. Owning it, selling covered calls. If we over the next month had an opportunity to buy it on a dip below 425, we'd have a look at it because of that defensive characteristic of the business. Caltex we've liked, so from this sort of $21 support level. I've spoken a bit in the past about this first test, first fail concept, so that's essentially what we've had here, where the market's rallied up, has pulled back 50% of that prior trend, it's found support, the momentum indicators have turned positive. Could have a little bit more room to move up to around 2650, but it's getting close sort of to where we see shorter term resistance. Brambles we like from a fundamental standpoint. The company just came out recently, reiterated earnings growth. It was a little bit lower than where the market had priced the business 6 months ago, but still, given the economic environment, for the company to come out and guide towards around 5% earnings growth was very bullish. So this stock should remain well supported and is a stock that you want to look at buying on any sell-off that we have. It'd be nice to see it back below sort of closer to that $10 range, which just puts it back on a more palatable PE and dividend yield. It is a little expensive where it is at the moment, but so keep an eye on that one, and you want to buy that on the dip. Amcor, we like this business. It's a buy on the dip. If we do see a bit of profit taking at some point in the US and you see Amcor back down at around 12.50, we'd be buyers of that. Oz Minerals, the same here, quality business. We like the expanded production story with Oz Minerals. It's under algorithm buy conditions, so comfortable with that at the moment. James Hardie's been one that we've spoken about. So I like the look of James Hardie and Boral. James Hardie, that first test, first fail, found support there at 17 and moving higher. JB Hi-Fi, we're not doing there at the moment, but is under buy conditions. Beach, not doing there at present. Mirvac, it's not our preference. Soul Patterson, not doing there. Sonic Healthcare, so we like this name. We're certainly bullish on it going back a few months ago, or a few, say 3-4 weeks ago. It's getting back up to where we think's full value. So again, it's a buy on the dip if you see any softness in the US market. If you're wanting to chase the stock, shuffle a stop loss there under 25.50, and as long as the momentum heads higher. But otherwise, if we do get a number of days of selling in the US back down sub $25, Sonic's a good opportunity. Not doing in the regional banks at the moment. Santos, our preference has been Origin and Santos over Woodside. Origin's now under sell conditions. Santos is still under buy. But if you see that price action roll over and come back below the average, or the momentum indicators roll over, you probably want to be a little bit cautious. We do think over the course of this year, oil prices recover, and it's a good theme. But again, cautious on that backdrop. The US, if we get a little bit of selling, there may be some profit taken in some of these energy names. Aristocrat Leisure, so found resistance there at 24, pulled back roughly 50%, found support at $20, moving higher. Track it as it trades above that average. It's not a stock that we've been too active in on an individual basis. It is in the model portfolio, though. Oil Search, not doing there at present. Transurban, so we've been bullish this as a recovery opportunity, but struggle to see how it gets back to trading where it came from at $15-16. We think it's certainly going to see cuts to the dividends for Transurban and Sydney and a number of the property trusts. Back up here at $13, Transurban should be getting pretty close to resistance and running out of steam. Telstra at around $3. It's hard to see too much downside below that. So to me, Telstra is one that should be sort of making its way onto your list at these levels. Continue to like Northern Star and Newcrest Mining. So Northern Star around $13 makes sense. I've updated the blog a number of times on that, but continue to like that. Rio, as a theme of getting exposure to a recovery in China. So if the worst case doesn't play out in equity markets, is Rio cheap or is BHP cheap? At around $80, it seems like iron ore's holding up okay at the moment. So on that basis, back down at around $80, maybe Rio can find support, so it comes back onto our radar there. Ramsay Healthcare, we like this, but we're not going to see any earnings growth this year. At around a 2.5% dividend yield where it is at the moment, it's hard to build a case that it deserves a higher share price than where it is at the moment. So we like it. Good defensive income stream, but probably more likely to just trade sideways at the moment. Star Entertainment under buy conditions, but still cautious on sort of Star and Crown at the moment. Wesfarmers, I've put support there at around this $35 level, but it's hard to see how Bunnings, despite everyone having more time on their hands and being willing to do handyman work around the house, the overall volume impact to the Bunnings business surely will be felt in this June numbers. So again, all things being equal, I think Wesfarmers probably trade sideways until we start to get a better idea of what this quarter earnings look like. AMP not there at the moment. QBE, so the concern there for QBE has been the regulatory or the legal challenges in the US around insurance policies that are trying to avoid covering business losses, under special carve-out conditions that, from what I've been reading, sounds like the business owners will likely win that challenge, and the insurers will suffer the consequences. So QBE's right in the firing line there. So we're just cautious on that at the moment. Ansell, so found support there at around $28. pushing back up against resistance. So if you own it, maybe think about selling covered calls over that. ASX, if you own it, think about selling covered calls. So again, we're toggling through all the companies that are in the top 100 model portfolio at the moment. Illumina should be finding support there around 150. CBA reports earnings on Wednesday. This is going to be a really interesting outcome for the market, just to see what the provisions look like from CBA and whether there's any cut to the dividend. So, we remain cautious on, the impact to the banks, even though the share price has corrected. We're still a bit cautious as to what those levels of provisionings ultimately need to look like. Lendlease, we like the long-term fundamentals here. They've got a significant portfolio of new projects there. Their whole urban development business model is attractive, but clearly there's some risks around whether the economy faces a recession or whether we have a V-shaped recovery. If there's a V-shaped recovery, Lendlease could be worth back up to $15-16 quite quickly, but there's just not enough evidence there on the horizon at the moment to really form a strong view on that. Westpac, so avoiding Westpac at the moment. Newcrest Mining, so we like the look of this at $27. Newcrest and North Star still attractive. ALS not there at present. Fortescue, preference leaning towards Rio over Fortescue at the moment. BHP getting a bit of a mix there with some exposure to recovery in energy prices. So Rio would appear to be a little more defensive. Maybe BHP could provide a little more growth into the back half of the year. Both very similar. CSL, so just worth flagging that we've had a retracement from 325 back down to 300 there. In early days, but just maybe keep an eye on sort of these momentum indicators and just think about it back at 300. Some analysts have downgraded the sort of current earnings for CSL, but we know from given time that buying CSL on the dips continues to reward shareholders. TPG, we had a buy at sub $7 on this. It pulled back, traded down to 685 thereabouts. It's rallied back up somewhere between sort of really at around that 750 to maybe $8 mark caps. I think the upside for TPG at the moment. Coca-Cola found support at $8 after a fairly disappointing earnings result. The market's probably getting a little bit ahead of itself. If this stock rallies back up to sort of this $10 level, more likely to form a view that it bumps along sideways and selling covered calls over it. You're driving that extra income to make the holding risk worthwhile. Woolworths back at $34.50. We like this, so buy on the dip here, let it recover a little and then sell covered calls. Cleanaway, we like this. It'd be nice to pick this up on a pullback again. We were buyers of it as expressed on the blog at around this 170 level. We've taken profit at the moment. We'd like to see it pull back below 180 and then buy it on the dip, but we like the long-term story there for Cleanaway. Seek, these technology stocks have had a nice rally, but getting back up against resistance at the moment. ResMed bumping sideways. We've got support there just under $24. NAB we remain cautious on, and so NAB, CBA, Westpac still thinking that there's more downside for the Aussie banks, but that probably plays out between now and July and August, and then ultimately we switch to a longer term, more bullish stance on the banks. Coles, keep an eye on this sell-off. I think value opportunities going to present. Whether we can get down to that sort of 450 level that I've marked there, we'll just wait and see, but certainly a break of that support over the next couple of days brings in a buying condition there that you want to take a look at. Car sales, so we've been bullish on this, but back up against resistance for the time being, and just keep an eye on the Nasdaq and the impact that that's going to have on the sentiment of our local tech stocks. Orica, watch these short-term momentum indicators. It looks at the moment with the weakness in today's close, it'll probably look to trade a little bit lower. Maybe with IPL doing a capital raising. You've got a bit of money coming out of Orica going into IPL to participate in the capital raising. But Orica should find support there, I would think, back down at around this 1550 level. So just keep that on your watch list. Magellan, so created the higher low formation there at around 44s, pushed up higher. NIB Holdings, we've spoken in depth about this. Their earnings slipped from 180 million down to 150 million coming into the COVID period. It's hard to see that turnaround in earnings suddenly improves, so we think at best it trades sideways, but still issues with the health insurers controlling cost. REA, we've been bullish on REA, Seek, Car, Zero, but for the most part, we think that rally's is captured for the time being still until we get more evidence of growth in the listing data. Challenger not doing there at the moment, avoiding that. So now we've switched into stocks that are under sell conditions. So Treasury Wine's just bouncing higher from an oversold position, but it is under algorithm sell conditions. Vicinity not doing there at the moment. Suncorp, remain cautious on Suncorp. Was surprised that their provisionings were so low in their announcement today, so concerned that there could be more bad news to come a bit further down the track there with Suncorp. South 32, so you can see there it was under sell conditions at around $3. It's rolling over. Charter Hall not there at present. Link, prefer Computershare. Centre Group, prefer probably GPT over Centre Group at the moment. Nine Entertainment, just keep an eye on this. Maybe it could push back up to around 150, 160 there before it runs into resistance, and watch for it to break back down below that moving average if you're looking for short opportunities in the market. Tabcorp, you can build a case that the fundamentals are improving here as pubs and clubs and reopen. But again, the impact to the earnings from what we've seen, there's better opportunities or safer opportunities in the market than chasing Tabcorp. Whitehaven Coal not there at the moment. Worley, concern there that it's pushing back up against resistance, so watch for a break below the average. Evolution, our preference is Northern Star and Newcrest. Iluka not there at the moment. Woodside Petroleum, so the preference has been Origin and Santos, although Origin's now under sell conditions, which we'll get to shortly. Aurora, so under sell conditions, continuing to move lower. Preference Amcor over Aurora. Cube, not really doing anything too much there at the moment. It's recently shifted to sell conditions, so just a bit concerned that resistance builds around that 265. So Goodman Group was a stock that had been under algorithm buy conditions for a while. It switched from sell conditions back in 2018 in March into buy conditions down here in October, and the algorithm stuck with the trade until just in the last day or until Friday, where it triggered that sell signal there. So we're now just cautious that Goodman Group creates resistance at around $15. We look for a pullback in maybe the next 3 to 6 months, and then another buy on the dip opportunity there in Goodman. Stockland's not doing there at the moment, and XTO. So Altium, so the technology business, it's had a very good rally off the lows there, back up at around 37. We think this is getting in a resistance level, so a little bit like the Nasdaq. If you're holding it, you can continue to stick with the upside momentum, but just be concerned when the price breaks down back below sort of that tight average there, which is just to sort of smooth out a trailing support level. AGL switched to sell conditions back there at around $21, moving lower, but we don't see the downside risk significant there. So there are people that hold AGL for dividends and probably selling a covered call over it makes sense. We're not convinced about the upside in the short term for it. Origin ran into resistance at around 550, so this is a stock that we were bullish on from lower levels. We always sort of had a view that $5.50 to $6 captured the current upside, so we'd expect it to consolidate. Again, if you're holding the stock, you could either just take profit at the moment or just watch it and just wait until it sort of these shorter term indicators roll over or the stock price comes back down below that average as your opportunity to get out of the stock. and Xero as well. So this is one of the tech stocks that has now hit sell conditions. So it's been in the model for a while, and we're just concerned that up at around $85, it's starting to get a little bit expensive there. Boral under sell conditions. We traded this on the bounce, and it's not very often we buy stocks that are under sell conditions. We do feel that Boral will create a longer term buy opportunity going into the latter part of this year and next year. So we'll watch this closely. If we do get a pullback back below 250, it might be worth taking a look at Boral on the long side. But for the moment, still under short conditions. Likewise with CIMIC, we think the longer term fundamentals are interesting here, but the stock's really just consolidating and trading sideways at around this $23 level at the moment. ANZ cautious on that, along with NAB, similar pattern in place across all the banks. Nothing there in AusNet. Bank of Queensland under pressure, moving lower. Incitec, so this is under sell conditions. It rolled over there at around 350. We've had the bounce back resistance at 240. I haven't read the full details of it, but I understand they've just announced a capital raising. It was fairly substantial. I think the number might have been somewhere in the order of $600 million. Obviously, it'll clear this up as the data or the announcement details come through, and I read them tomorrow, and I'll update you on the blog. But the technical indicators here show resistance at around 240. It'll be interesting to see just how well received that capital raising is, and I'll update you further on the blog regarding that. Crown Resorts running in a resistance at $10 there, so price moving back below the average. We're a bit concerned on that from a valuation standpoint. WiseTech, I think, if we think about what's happening in that Nasdaq index and the potential for it to run into resistance, it's worth keeping WiseTech on your watch list if you're looking for short opportunities in the market and trade it on a break below that average. A2 Milk, this will switch to buy conditions over the next 6 months or so. So we'll get an opportunity to see this added back into the model portfolio. So we just need to sort of give this some time, or probably something around $15, I'd imagine, in the second half of this year that we see a buy condition there. Medibank Private under resistance or under sell conditions now at 280. So we're comfortable with that. We don't think that's contrary to the fundamental story there with earnings. Domino's not doing there at the moment. Spark moving lower, and there we are back to Macquarie. So when you're thinking about the stocks to look at, there's a handful from those buy signals that we're comfortable with. There's a number of stocks under sell conditions that we're concerned about. Hopefully you made some notes as I went through that. Just to finish tonight, what I'd like to do is go into the watch list, come across to here and go on to the blog posts, and we're just going to toggle through the stocks that have been posted on the blog as a way of sort of refreshing or ensuring that you've kind of got the notes down as to what ideas we want to be taking action on. So Macquarie, we've got support there at around $93. Maybe there's a few more dollars of upside in it, but we think that at around 120 it captures full value. The concern was the earnings trend coming in that last half. Cochlear supported around 170. Okay, being long that with a stop below. Computershare, prefer that over Link. Should move sideways. It's a covered call opportunity. Caltex, we've liked this just as a theme with a reopening of the economy that Caltex benefits from a sentiment standpoint around that. Still, there's not a lot of clarity from any of these companies really as to what the earnings impact and who needs to raise capital. I don't think that becomes apparent until maybe late May, certainly late May, into mid-June. But upside for Caltex could be to around 26.50, but getting fairly close to resistance there for the moment. James Hardie, we've liked that, but again, most of these names sort of we think that the rally sort of into that last section of it from a momentum standpoint for the moment. So Sonic we like, but again, buy on the dip. Northern Star, comfortable with buying Northern Star at the moment, the same as Newcrest. CBA, we're watching the result on Wednesday. Lendlease, we like the long-term fundamental story there, so we just got to get comfortable with what that recessionary picture looks like for the global economy. Newcrest at 27 seems like a safe buy at the moment. InvoCare, 2020 earnings will be down about 10% on the same time last year, maybe flat into 2021, starting to see some earnings growth again in 2022. So I've just put support there at around that 950 level there, and for traders we're comfortable looking at that while it holds above that. TPG, comfortable with that while it sits above that support line there at 685, stops below it. Woolworths, we think this is a buy on the dip down here at around $34. Cleanaway, we like this. We've captured a good part of this rally, hoping to see a pullback and a buy on the dip. ResMed finding support at around $24. A National Bank, I think we're cautious on this, and we'll get a better feel for how the banks are going to behave or trade following CBA's result on Wednesday. Coles, heavy day, closed on its lows, so just watch this over the next day or two, but a pullback to a sort of sub $15 at that $14.50 I think would be a good buying opportunity. Orica there, a little bit cautious, looking for a bit more downside. Crown we think's running into resistance there. So what I've just done, and then back to the beginning, so what I've done there is gone into the watch list and we've toggled through the recent blog posts. That retains the last 30 days of blog posts. The other thing that you may want to do, accessing the members area, is look at the recent ASX signals. So if you click on the ASX signals, this retains the last 7 days of signals. So if we get the gains to the top, under buys, and let's just have a quick look through the recent algorithm signals, and these will be a combination of both buy and sell. So Reece there's under buy conditions. I'll put the support in. Superloop under resistance, and we just shift that across to there. So we'll keep an eye on how that behaves. Shift that resistance across there. Not a stock that are really active in there. To add a support line or a resistance line in, create your segment from over there under the menu, and you can drag that into position there. So the last sell signal there was obviously very accurate. Stocks sold off, and now we just need to keep an eye on whether we get a repeat of that running into resistance. Nearmap there under resistance at around $1.70. Keep an eye on the shorter term indicators with these growth names. You want to see them roll over before you get too aggressive on the short side of any of these. Resistance in place there. Cube Holdings, we spoke about this. Resistance back up at around that 270, 280. We'll put the resistance in place there. Keep an eye on how that trades. Same here. Goodman Group, we've discussed that in fair detail. Put a resistance in place, and the relevance of just putting these resistance in place is when you're toggling through the graphs, it just gives you a quick reference point. So it's interesting within these ETFs, you're just starting to see a number of these global. Now this one's specific to global robotics and artificial intelligence, but even all the global ETFs on the equity markets are now starting to switch to sell conditions. So same applies as our view on the Nasdaq. We're just mindful, we see this as the first warning. The momentum's still strong, but as soon as you get a rollover, a break below the average, or a turn down in these momentum indicators, it's worth just being a bit more cautious in the way you're thinking about the market. And the same there with Altium. We spent a bit of time on that one. So pushing up near resistance likely, just got to wait for a rollover and a break below that that resistance line. So again, what we're doing here is toggling through the signals that come through at 3:30 in the afternoon, and this particular list retains those for the last 7 days. Origin was one that we spent a bit of time on. Zero we covered. So Morningstar International Share, so a lot of these ETFs that cover global markets, we're just starting to see this the lower low and lower high formation. So the Vanguard Australian Small Companies Index now under sell conditions. Global Growth Fund under sell conditions. Global cyber security now under sell conditions. So what we'd expect to see happen is a pullback in some of these names, and maybe in the next 3 to 6 months them added back into the algorithm model portfolio, as they created new higher low formation. Collins Food just running a resistance there around $8. So if you have access to the members area, you can store your portfolio in one of these watch lists, and you can toggle through your portfolio and just keep an eye on which ones are under sell conditions and which ones are under buy. Or you can go into your model portfolio and have a look at ensuring that you're sort of using that as the area to identify your opportunities. Bell Financial running in a resistance there at 120. Suspect that is an okay opportunity on the short side. Put the resistance in place here. Medibank, I think fundamentally, struggle to see the earnings support there. Domain Holdings, I think that makes sense at $3. It's running in a resistance. I think IOOF, fair that's running in a resistance around that 430. We've got resistance we just put in place up there. Retail Food Group, I think it's a company that's struggled for quite some time, so very well may be an issue there where it runs into resistance again. And there we are back to the beginning. So the whole software program works through it by toggling through your lists. So if you wanted to come in and have a look at sort of the iShares or all the ETFs listed on the ASX, if you want to look at the Dow Jones 30, you can do that. And if you're logged in and you'd like some help or some guidance with the software, please don't hesitate to give the office a call. Thank you for listening in tonight, and I look forward to speaking again next week.